The signals we're seeing right now are impossible to ignore. When an entire industry begins to strain under the pressure of shrinking supply and rapidly accelerating demand, it's not a moment to sit back, it's a moment to analyze, to anticipate, and to act decisively. Silver is moving from a traditional precious metal into one of the most critical industrial resources of the next decade, and the market is reacting exactly the way you would expect when a system built on balance suddenly confronts imbalance. What we're witnessing is not a temporary squeeze or a seasonal fluctuation. This is a structural shortage, and the data confirms it. For the fifth consecutive year, global silver demand is outpacing supply. That alone should make anyone pay attention, but the bigger story is why this shortage is deepening. Silver has become the backbone of multiple technological revolutions happening simultaneously. Solar energy manufacturers are consuming record amounts as nations accelerate the shift to clean power. Electric vehicles require more silver per unit than traditional cars, and as EV adoption rises, so does consumption. And then there's the surge in high-performance electronics, 5G infrastructure, and the exponential growth of AI data centers, all of which rely heavily on silver's unmatched conductivity. These converging trends are not slowing down, they're speeding up. Meanwhile, supply is not responding with the same velocity. Unlike copper or iron, silver isn't mined primarily for its own sake. Nearly 70% of global silver production comes as a byproduct of mining other metals. That means even if silver prices rise dramatically, most mining companies won't increase production unless the other metals become more profitable too. This lag between price signals and supply response creates a built-in bottleneck, and the market is now hitting that bottleneck hard. Recycling isn't bridging the gap either. Even with more aggressive collection programs, recycled silver simply cannot meet the explosive growth in industrial demand. The result, prices are breaking records, volatility is increasing, and industries dependent on silver are preparing for disruptions. What's even more concerning is that many companies underestimated how quickly the green energy expansion would drain available supply. Solar manufacturers alone have pushed silver consumption to levels analysts didn't expect until later this decade. When forecasts prove too conservative, markets recalibrate, often violently, and that recalibration is happening now. Investors are beginning to notice the cracks forming beneath the surface. Physical silver dealers are reporting tighter inventories. Premiums in several regions have begun to rise. Industrial buyers are quietly securing long-term contracts to protect themselves from future shortages. When industries start locking in supplies ahead of time, it's a sign they see what's coming, and they're preparing before the general public understands the magnitude of the shift. This situation isn't just about price. It's about the revaluation of a metal that the world has chronically undervalued. For decades, silver was treated as a secondary asset, important, but not essential. That mindset is now obsolete. Silver is no longer optional for the technologies shaping the next century. It's foundational, and when something foundational becomes scarce, markets rethink its worth. We're at the edge of a transformation driven not by speculation, but by undeniable fundamentals. The industries pushing us into a new technological era are the same industries exerting unprecedented pressure on silver supplies. And unless global mining output undergoes a dramatic and unlikely surge, the supply deficit will persist and likely deepen. The world is waking up to a reality that was long overlooked. Silver is one of the most strategically important materials of the modern age, and the shortage we're seeing today is a signal, a powerful one, pointing toward a future where silver isn't just valuable, but vital. The global silver market is sending a message that can no longer be ignored. When data, industry behavior, and long-term trends align this clearly, it becomes impossible to dismiss what's unfolding. We are witnessing a structural shift, not a temporary shortage, not a speculative bubble, but a deep systemic deficit emerging at the core of one of the world's most important industrial metals. Silver has reached a point where the forces driving demand are expanding exponentially, while the sources of supply remain stubbornly constrained. That imbalance is now erupting into a full-scale global crisis, and understanding its trajectory is critical. The first thing to recognize is the magnitude of the supply deficit itself. For multiple consecutive years, silver demand has exceeded supply by wide margins, creating one of the largest cumulative deficits the modern market has ever seen. Industrial consumption has become the dominant force, far outpacing investment demand and pushing silver into an entirely new economic category. Solar panel production alone has risen to record heights, absorbing an unprecedented amount of silver as nations accelerate their commitments to renewable energy. And this is not a trend slowing down, it is accelerating. Every major economic region is scaling solar infrastructure at a pace that analysts underestimated, and silver remains irreplaceable in this process due to its unmatched conductive properties. But this crisis is not driven by solar energy alone. Electric vehicles are now consuming more silver per unit than ever before, thanks to evolving battery chemistry and high-efficiency circuitry. The expansion of charging infrastructure adds another layer of demand. On top of that, the rapid growth of AI data centers, with their need for advanced electronics, high-speed chips, and thermal-efficient systems, adds a demand category that barely existed a decade ago. The world is being rebuilt around technologies that require silver at every stage, and no credible alternatives are ready to replace its performance. The supply side tells an entirely different story, one defined by limitations. Most silver does not come from primary silver mines. It comes as a byproduct of mining other metals like copper, lead, and zinc. This creates a structural inflexibility. Even if the world suddenly needs far more silver, mining companies cannot simply increase production unless the economics for those other metals also justify expansion. That dependency creates a supply chain reaction that moves far more slowly than the industries demanding silver. And new discoveries, they have been few, small, and insufficient to meet the rising need. Recycling, often seen as the safety valve for shortages, is failing to keep up. The challenge is that most modern silver applications distribute the metal in extremely tiny amounts, soldering, circuitry, industrial coatings, making recovery expensive and technically difficult. So while recycling can support investment markets, it cannot meaningfully supply the accelerating industrial demand. All of this has resulted in a rapidly tightening physical market. Premiums in many regions have begun to rise. Industrial buyers are securing long-term supply contracts earlier and at higher volumes. Some nations are increasing strategic stockpiles, and investors, recognizing the shift, are turning toward physical silver at rates not seen in years. This is how a crisis begins, not with panic, but with quiet behaviors across markets that reveal the underlying truth. Silver is being redefined. It is no longer primarily a precious metal, it has become an industrial necessity at the heart of the clean energy transition and the digital future. When a resource that is essential becomes scarce, markets don't just adjust, they reprioritize. They reassess its value, its strategic importance, and its role in the global economy. The deficit we are witnessing is not an isolated event. It is a signal of a future where silver becomes one of the most indispensable and contested materials of the modern age. The signals emerging from the silver market right now are impossible to overlook. What we are seeing is not a routine fluctuation or a seasonal imbalance. This is a structural breakdown in supply at the very moment when global demand is accelerating faster than at any point in modern history. For investors preparing for 2025, this moment represents a turning point, one where data, technology, and macroeconomic reality all converge to reveal a market under extraordinary pressure. Silver is transitioning from a traditional precious metal into a critical industrial resource, and the collapse in available supply is beginning to reshape everything from manufacturing decisions to investment flows. Across the world, industries dependent on silver are quietly sounding alarms. The latest figures show one of the steepest supply deficits in decades, driven by the explosive expansion of clean energy infrastructure, advanced electronics, and electric vehicle manufacturing. Silver has become the backbone of these technologies because no material matches its conductivity, durability, and performance. As solar panel production reaches new highs, demand for silver has surpassed forecasts year after year. The energy transition is accelerating, not slowing, and each gigawatt of new solar capacity requires significant amounts of silver, far more than most people realize. Electric vehicles amplify this pressure. Each new EV rolling off the assembly line consumes significantly more silver than a traditional combustion engine vehicle. The shift toward more sophisticated battery management systems, autonomous driving sensors, and high-efficiency power electronics only increases that requirement. And with governments pushing for aggressive EV adoption targets, the demand curve for silver is turning sharply upward. At the same time, the data revolution is advancing at breakneck speed. AI data centers, HICE, speed networking hardware, and advanced computing components depend heavily on silver for their circuitry and thermal performance. These are not cyclical industries. They are expanding exponentially, with investment pouring in globally. As these technologies scale, they are creating a new baseline demand for silver that did not exist a decade ago. Yet the supply side remains constrained, rigid, and unable to respond with the agility the market requires. Most of the world's silver comes as a byproduct of mining other metals, meaning that even if silver prices rise sharply, mining companies cannot quickly increase production unless those other metals become more profitable as well. This creates a structural bottleneck in the supply chain that is now being exposed in real time. Primary silver mines, on the other hand, are limited in number, aging, and struggling with declining grades. Despite rising demand, there has been no meaningful surge in new discoveries or significant mining expansions capable of closing the supply gap. Recycling offers only marginal relief. In many of silver's modern applications, particularly electronics, the metal is used in microscopic quantities, making recovery technically difficult and often economically unfeasible. As a result, recycling can support investment markets, but it cannot keep pace with industrial growth. The world is using silver faster than it can be recovered or replaced, and now we're seeing the early signs of stress across the physical market. Premiums on coins and bars are rising, inventories are tightening. Industrial buyers are securing multi-year contracts to protect their supply lines. These quiet but decisive actions are the whispers before the storm, the behaviors that reveal where the market is truly heading. For 2025 investors, this environment represents both a warning and an opportunity. A collapsing supply structure in the face of accelerating demand is the kind of imbalance that reshapes markets, revalues assets, and redistributes capital on a global scale. Silver is no longer a passive store of value. It is a strategic material at the core of the world's most transformative technologies, and as the supply contraction becomes more severe, it will force a reevaluation of silver's true economic significance in the years ahead. The indicators emerging across the global silver market point to a dramatic shift already in motion. The shortage isn't a distant possibility or a hypothetical scenario, it has begun, and the data is reinforcing that reality with unmistakable clarity. What we're seeing is the early phase of a long-term structural imbalance, driven by technology, accelerated by policy, and intensified by a world transitioning into a cleaner, more electrified, and more digital future. When a resource this essential becomes constrained, the implications ripple across industries, economies, and investment landscapes, and right now, those ripples are rapidly turning into waves. Silver sits at the crossroads of multiple exponential technologies. The energy transition alone has pushed demand to unprecedented levels. Solar manufacturers have consumed more silver in the last few years than at any point in history, shattering expectations and forcing analysts to reassess their models. Solar panels depend on silver's unparalleled conductivity, and until a commercially viable substitute emerges, which remains highly unlikely in the near term, growing solar capacity guarantees rising silver consumption. Nations worldwide are accelerating their shift to renewable energy, and that shift is fundamentally silver intensive. At the same time, the transportation sector is undergoing a transformation that further amplifies demand. Electric vehicles, with their complex wiring systems, advanced electronic controls, and high-efficiency components, require significantly more silver than traditional cars. As EV manufacturing scales toward mass adoption, the strain on silver supply intensifies. And this is just the beginning. The next generation of vehicles, autonomous, connected, and sensor-driven, will push demand even higher. Overlay these technological shifts with the explosion of digital infrastructure. Data centers powering AI applications, cloud computing, and advanced communications hardware depend heavily on silver to achieve efficiency and speed. Every new server cluster, every high-frequency chip, every 5G expansion adds incremental pressure to the global silver supply chain. These forces are not cyclical, they're compounding. Each new layer of technological advancement doesn't replace old demand, it stacks on top of it. Yet the supply side is constrained in ways that make this shortage far more than a temporary imbalance. Silver mining is not keeping pace with global requirements, and there's a fundamental reason behind that. Most silver is produced as a byproduct of mining other metals like copper and zinc. That means the traditional market response, ramping up production when prices rise, simply doesn't work here. Unless those other metals experience a surge in demand or price, silver production remains capped. This structural limitation ensures that the supply response remains slow, rigid, and insufficient. Primary silver mines, the ones that do focus on silver as their main output, are facing their own challenges. Declining ore grades, aging infrastructure, higher extraction costs, and a lack of major new discoveries. For more than a decade, exploration has failed to uncover deposits large enough to offset growing demand. This means global supply is increasingly reliant on existing assets already operating near capacity. Recycling is often viewed as the safety net, but in silver's case, it's an incomplete solution. Much of the silver used in modern electronics is dispersed in tiny quantities, making recovery difficult and uneconomical. As a result, recycling can stabilize small parts of the market, but cannot compensate for the accelerating industrial needs. The world is now using far more silver than it can efficiently recover, and the signs are already visible. Inventories are thinning, industrial buyers are moving early to secure long-term contracts. Investors are shifting attention toward physical silver, sensing the deeper imbalance forming beneath the surface. These aren't speculative reactions, they're strategic moves, driven by the recognition that a new era for silver has begun. This shortage marks the beginning of a profound revaluation of silver's role in the global economy. A material, once viewed primarily as a precious metal, is now emerging as a cornerstone of modern technology, clean energy, and digital infrastructure. And as demand accelerates while supply struggles to keep pace, the world is being forced to rethink what silver is truly worth, not just in markets, but in the future we are building.